Based on the historical data and forecast, Bitcoin has shown significant volatility with a recent downward trend. The support price is consistently around $109,100, and the resistance is at $110,100. The RSI indicates oversold conditions, particularly on September 26, 2025, with a reading of 38.5. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Therefore, I recommend a long position with an entry price of $105,600. A stop loss should be placed just below the support level at $104,000 to protect against further downside risk. The initial target price should be set at the resistance level of $110,100, aiming for a quick profit. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. We will enter a long position when the RSI falls below 40 and the price touches the lower Bollinger Band. For the forecast period, if the price breaks below $105,600, we will exit the position immediately. If the price reaches $110,100, we will take partial profits and move the stop loss to the break-even level. This blended strategy combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. The final portfolio will be 60% long Bitcoin and 40% in cash. Based on the historical data and forecast, Ethereum has shown a significant downtrend, particularly evident in the recent price action and the bearish forecast for the next week. The RSI consistently dipped below 50, reaching a low of 30.6, indicating oversold conditions. However, the subsequent forecast suggests continued downward pressure, with prices predicted to fall to 38.70. Considering these factors, I recommend a short position strategy. We will enter a short position at $4,150. The stop loss will be set at $4,170 to protect against a potential reversal. The initial target price will be $3,960, based on the forecast and a conservative estimate of the downtrend's continuation. To refine this strategy, we'll incorporate the Bollinger Bands. The price has consistently breached the lower band recently, reinforcing the downtrend. If the price approaches the upper Bollinger Band during the forecast period, which is unlikely given the current trend, we will adjust the target price to $3,860, aligning with the forecast low. This layered approach, combining RSI signals with Bollinger Band confirmation and forecast data, aims to maximize returns while mitigating risk. The final portfolio will be 70% short Ethereum and 30% in cash. Based on the historical data and forecast, XRP exhibits a downtrend, consistently testing the support price of $2.75. The RSI consistently hovers below 50, with recent dips below 40, indicating oversold conditions. The Bollinger Bands show XRP trading within a narrow range, suggesting low volatility. Considering these factors, I recommend a contrarian strategy targeting a potential rebound. We'll initiate a long position at $2.74, coinciding with the forecast price on September 29, 2025. To mitigate risk, place a stop-loss order at $2.68, just below the lower Bollinger Band. Our target price will be $2.85, aligning with the recent resistance level. To optimize returns, we'll employ a layered exit strategy. Initially, secure 50% of the position at $2.80. If the price continues to rise, move the stop loss to break even at $2.74 and allow the remaining 50% to run. If the price fails to reach $2.85 and starts to decline, the stop loss at $2.68 will be triggered, limiting losses. This combined strategy leverages RSI oversold signals, Bollinger Band support, and resistance levels to maximize potential gains while minimizing downside risk. The overall portfolio will be 60% long XRP and 40% in cash to allow flexibility for future opportunities. Based on the historical data and forecast, BNB demonstrates a generally upward trend, bouncing between the support price of $949 and a resistance price of $1,040. The RSI fluctuates, indicating periods of overbought and oversold conditions. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. Initially, we will enter a long position at $972 when the forecast price is available. A stop loss will be set at $949, just below the support level, to mitigate potential losses. The target price will be $1,040, coinciding with the resistance level. This strategy aims to capitalize on the upward trend while utilizing stop-loss orders to manage risk. To further refine the strategy, we'll incorporate Bollinger Bands. If the price touches the lower band, consider a long entry at $977, with a stop-loss at $949 and a target price of $1,040. Conversely, if the price approaches the upper band, consider a short position at $988, with a stop-loss at $1,010 and a target price of $977. This combined approach, blending RSI and Bollinger Bands, offers a robust framework for navigating the market and maximizing potential returns while effectively managing risk. Based on the historical data and forecast, Solana demonstrates a clear downtrend, particularly evident in the recent price action and the downward forecast for the next week. The RSI consistently dipped below 50, reaching as low as 35.6, indicating oversold conditions. Considering this, I recommend a short position. Entry price should be set at $214. The stop-loss should be placed slightly above the upper Bollinger Band at $260 to protect against unexpected upward movements. The initial target price is $193, aligning with the established support level. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, it signals an oversold condition, reinforcing the short position. Conversely, if the price touches the upper Bollinger Band, it suggests a potential reversal. Therefore, I suggest a tiered target approach. The first target is $193, the support level. If the price breaks through this level, the second target is $180. The strategy combines trend analysis, RSI signals, and Bollinger Band confirmations for a high-probability, risk-managed short position. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently dipped below 50, indicating a bearish sentiment, and recently touched 40.2, nearing oversold territory. The Bollinger Bands have widened, suggesting increased price fluctuations. The forecast for the next week projects a continuation of this downward trend, with prices ranging from $0.248 to $0.231. Considering these factors, I recommend a short position strategy. Enter a short position at $0.248, with a stop-loss placed at $0.26, just above the upper Bollinger Band to mitigate potential false breakouts. Set a target price at $0.23, aligning with the forecast and the support level. To refine this strategy, we'll integrate the RSI. If the price reaches $0.23, we'll secure profits. If the RSI rises above 70, indicating an overbought condition, we'll exit the short position early at $0.242 to avoid potential reversals. This combined strategy leverages both trend analysis and momentum indicators for enhanced risk management and higher potential returns. The portfolio will prioritize the short position strategy with RSI confirmation for optimal efficiency. Based on the historical data and forecast, TRON has been fluctuating within a range bounded by the support price of $0.337 and the resistance price of $0.351. The RSI has been oscillating, dipping below 50 and approaching the oversold level of 20, indicating potential short-term buying opportunities. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakouts. Considering these factors, I recommend a combined strategy incorporating RSI and Bollinger Bands. We will implement a long position when the RSI falls below 20, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.339, with a stop-loss set at $0.337, just below the support level, to protect against unexpected downside. The initial target price will be $0.343, aligning with the upper Bollinger Band and a modest profit target. To optimize returns, we will utilize a dynamic trailing stop-loss strategy. As the price rises above $0.343, we will adjust the stop loss to $0.34, locking in profits while allowing for further upside. If the price reaches the resistance level of $0.351, we will take partial profits and move the stop loss to break even, allowing us to capitalize on any potential upward continuation. If the price falls back below $0.34, we will exit the remaining position. This combined approach, leveraging RSI and Bollinger Bands with a dynamic stop loss, aims to maximize profit potential while minimizing risk in the volatile TRON market. Based on the historical data and forecast, Cardano shows a downtrend. The price has been consistently below the upper Bollinger Band and the RSI is mostly below 70, indicating a lack of strong bullish momentum. The forecast for the next week predicts a continued decline. Given this, I recommend a short selling strategy. We'll enter a short position at $0.819. The stop loss will be set just above the upper Bollinger Band at $0.774 to limit potential losses if the price unexpectedly reverses. Our target price will be $0.766, aligning with the forecast price at the end of the week. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 20, oversold, we will consider covering the short position. If the RSI rises above 80, overbought, we will consider adding to our short position. However, given the prevailing downtrend, our primary focus will remain on the short selling strategy with an entry price of $0.819, a stop loss of $0.774, and a target price of $0.766. This approach balances risk management with the potential for high returns in a declining market. Based on the historical data and forecast, Chainlink exhibits a downtrend. The RSI consistently falls below 50, indicating a prevailing bearish sentiment, with readings dipping as low as 34.8 on September 26, 2025. The Bollinger Bands also confirm this, as the price has been trading near the lower band for the past few days. Given this, I recommend a short selling strategy. Enter a short position at $21.1, placing a stop loss order at $21.7 to protect against a potential reversal. The initial target price should be $20.2, aligning with the established support level. To refine this strategy, we'll incorporate a dynamic adjustment based on the RSI. If the RSI rises above 50 during the forecast period, consider closing the short position and reevaluating. For the forecast period, if the price reaches $20.2, take partial profits and move the stop loss to the entry price of $21.1. If the price continues to decline, with the forecast predicting a further drop to $20.2, the final target price should be $20.2. This approach balances risk management with the potential for additional gains. Based on the historical data and forecast, Wrapped Beacon ETH has shown a significant downtrend, particularly evident in the recent sharp decline from $49.50 to $41.90. The forecast for the next week projects a continuation of this downward momentum, with prices expected to range between $41.50 and $44.60. Considering the RSI consistently falling below 50, with several days trading in oversold territory, below 30, and the Bollinger Bands exhibiting a widening spread, indicating increased volatility, a short selling strategy is warranted. The support level at $4,190 provides a crucial floor. I recommend entering a short position at $4,460, placing a stop loss at $4,480 to protect against a potential reversal, and setting a target price of $4,190 to capitalize on the anticipated downtrend. To refine this strategy, I'll incorporate Bollinger Band signals. When the price touches the upper Bollinger Band, it suggests a potential shorting opportunity. Given the forecast, entering a short position at $4,390, with a stop loss at $4,460 and a target price of $4,160, appears prudent. This approach combines the RSI's oversold indication with the Bollinger Band's volatility signal for enhanced precision. This portfolio is the most efficient because it combines the signals from RSI and Bollinger Bands to achieve high returns. Based on the historical data and forecast, Jito shows a downtrend with increasing volatility. The RSI consistently dips below 50, indicating weakening momentum, and recently entered oversold territory below 40. The Bollinger Bands have been widening, suggesting increased price fluctuation. Considering the forecast for the next week, the price is expected to continue its downward trajectory, reaching as low as $1.51. Therefore, I recommend a short selling strategy. The entry price should be $1.6, with a stop loss placed at $1.67 to limit potential losses. The initial target price is $1.54 based on the forecast. To maximize returns, I suggest a tiered target approach. After reaching $1.54, we'll move the stop loss to break even at $1.6. If the price continues to fall, the next target is $1.51. This strategy combines trend analysis, technical indicators, and forecast data to achieve a high-return investment while managing risk effectively. This approach allows us to capitalize on the current downtrend while protecting capital with well-defined stop-loss levels and adjusting targets as the price moves favorably. Based on the historical data and forecast, SE has been experiencing a downtrend, with the price fluctuating within a defined range between the support price of $0.269 and the resistance price of $0.313. The RSI consistently dips below 50, indicating a prevailing bearish sentiment. The forecast for the next week projects a continued downward trajectory, with prices hovering around $0.274 to $0.292. Considering these factors, I recommend a short selling strategy to capitalize on the expected price decline. We will initiate a short position at $0.292, placing a stop-loss order at $0.295 to limit potential losses if the price unexpectedly reverses. The target price for this trade is set at $0.269, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests further downside potential. We'll use the RSI to confirm our entry. If the RSI falls below 40, we will enter a short position at $0.274, with a stop loss at $0.278 and a target price of $0.269. This combined approach leverages both momentum and volatility indicators for a more robust trading decision. This portfolio combines the short selling strategy with the Bollinger Bands and RSI confirmation, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Pendle demonstrates a downtrend. The recent RSI values have consistently fluctuated below 80, indicating a lack of overbought conditions, and the forecast suggests a continued decline. The price has been testing the resistance level of $4.94 for a while, failing to break through. The Bollinger Bands show the price currently near the lower band, suggesting a potential bounce, but the overall trend is bearish. Therefore, I propose a short selling strategy. Entry price will be $4.46, with a stop loss placed at $4.58 to protect against a potential rebound. The initial target price is $4.43, aiming to capitalize on the existing downtrend. To refine this strategy, I will incorporate the RSI and Bollinger Bands. When the RSI falls below 40, indicating an oversold condition, we can consider a partial cover at $4.43. If the price breaks below the support level of $4.43, we will tighten the stop loss to $4.42 and adjust the target price to $4.40. Conversely, if the price touches the bottom of the Bollinger Bands and the RSI is below 30, a small long position can be considered with an entry price of $4.43, a stop loss at $4.45, and a target price of $4.46. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Conflux shows a clear downtrend, particularly evident in the recent price action and the projected prices for the next week. The price has consistently approached the support level of $0.138 and the forecast suggests it will continue to decline. The RSI consistently falls below 50, indicating a bearish sentiment, and has recently dipped into oversold territory. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout, likely downward given the overall trend. Therefore, a short selling strategy is the most suitable approach. I recommend initiating a short position at $0.152, capitalizing on the initial forecast price. Given the strong downtrend, a conservative stop loss should be placed slightly above the upper Bollinger Band, at $0.158. For the target price, I suggest aiming for the support level of $0.138, providing a cushion against potential price fluctuations. If the price continues to decline, we can adjust the target price to the next significant support level, which is yet to be identified. This strategy combines the bearish trend confirmation from the RSI, the Bollinger Band's contraction, and the forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana demonstrates a clear downtrend, particularly evident in the recent price action and the downward forecast for the next week. The RSI consistently dipped below 50, reaching as low as 35.6, indicating oversold conditions. Considering this, I recommend a short position. Entry price should be set at $214. The stop loss should be placed slightly above the upper Bollinger Band at $260 to protect against unexpected upward movements. The initial target price is $193, aligning with the established support level. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, it signals an oversold condition, reinforcing the short position. Conversely, if the price touches the upper Bollinger Band, it suggests a potential reversal. Therefore, I suggest a tiered target approach. The first target is $193, the support level. If the price breaks through this level, the second target is $180. The strategy combines trend analysis, RSI signals, and Bollinger Band confirmations for a high probability, risk-managed short position. Based on the historical data and forecast, Pudgy Penguin shows a downtrend, supported by a decreasing RSI and the forecast prices consistently below $0.03. The recent RSI values have been fluctuating between 36.0 and 62.8, indicating periods of both oversold and overbought conditions. Considering the support price of $0.0285 and the forecast, a short position appears to be the most suitable strategy. We will implement a strategy based on the RSI, Bollinger Bands, and support levels. The entry price will be $0.0294, coinciding with a relatively low RSI of 41.9 and a price nearing the support level. The stop loss will be set at $0.031, slightly above the center of the Bollinger Bands to allow for some price fluctuation. The initial target price will be $0.0268, near the recent low and support level, aiming for a quick profit. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the bottom of the Bollinger Bands, which is around $0.0273, we will adjust the target price to $0.025. Conversely, if the price approaches the center of the Bollinger Bands, we will tighten the stop loss to $0.0299. This dynamic adjustment allows us to capitalize on short-term price movements while mitigating potential losses. The portfolio will prioritize the RSI-based strategy with Bollinger Band adjustments, aiming for a high-return, short-term trading approach. Based on the historical data and forecast, PYTH network shows a downtrend with periods of consolidation. The RSI consistently dips below 60, indicating a lack of strong bullish momentum. The forecast for the next week projects a continued downward trajectory, with prices ranging from $0.16 to $0.154. Considering the support level at $0.148 and the Bollinger Bands consistently trending downwards, I recommend a short position. Entry price should be $0.154, with a stop loss placed just above the upper Bollinger Band at $0.185 to limit potential losses if the price unexpectedly reverses. The target price for this short position is set at the established support level of $0.148. This provides a reasonable profit margin while acknowledging the strong support level. The strategy combines technical indicators like RSI and Bollinger Bands with price action analysis, specifically the support and resistance levels. This integrated approach aims to maximize potential returns while managing risk effectively. The portfolio will be 60% short PYTH network, 30% in stable coins, and 10% in other altcoins. This diversified approach mitigates risk and captures potential gains from other assets. Based on the historical data and forecast, Ether.fi shows a generally upward trend with volatility. The RSI consistently fluctuates, but recent values suggest a move towards overbought territory. The Bollinger Bands indicate periods of expansion and contraction, signaling potential price swings. Considering these factors, I recommend a long position strategy focusing on capitalizing on the upward momentum and utilizing the Bollinger Bands for risk management. I propose entering a long position at $1.62 on September 27, 2025. The initial stop loss should be set at $1.59 to mitigate potential downside risk. The first target price is $1.68, coinciding with the forecast price and a reasonable profit margin. If the price reaches $1.68, consider moving the stop loss to the entry price of $1.62 to secure profits and protect against a reversal. The second target price is $1.69, aiming for a more substantial gain. Finally, if the price continues to climb, the ultimate target price is $1.7, based on the forecast. This strategy combines RSI and Bollinger Bands to identify favorable entry points and manage risk effectively, aiming for high returns in a volatile market. Based on the historical data and forecast, Trust Wallet demonstrates a clear upward trend, particularly evident from September 20th onwards. The price has consistently broken through previous resistance levels, and the forecast for the next week indicates continued upward momentum. Considering the RSI values consistently above 60, with peaks nearing 90, suggests the asset is nearing overbought territory, but the upward momentum remains strong. The Bollinger Bands also show the price consistently trading above the upper band, reinforcing the bullish trend. Therefore, I recommend a long position strategy. My recommended strategy is to enter a long position at $1.31. Given the current upward trend and the forecast, a reasonable target price would be $1.38, reflecting the forecast high for the week. To manage risk, set a stop-loss order at $1.27, just below the forecast low for the week. This strategy combines the bullish trend identified through historical data and forecast, RSI readings, and Bollinger Bands positioning. This approach aims for high returns while mitigating potential losses with a strategically placed stop-loss. Based on the historical data and forecast, Quant exhibits a downtrend with increased volatility. The RSI consistently dips below 50, indicating a weakening momentum, and recently touched the oversold level of 30.7 on September 21, 2025, and 32.7 on September 26, 2025. The Bollinger Bands show widening bands, confirming the increased volatility. The forecast for the next week predicts a continued downward trajectory, with prices ranging from $94.2 to $92.0. Considering these factors, I recommend a short position strategy. Entry price will be $94.2 with a stop-loss at $97.2, just above the recent resistance level. The initial target price will be $90.6, aligning with the forecast low for the week. To maximize returns, I suggest a tiered approach. After reaching the first target, we will move the stop-loss to the entry price of $94.2. If the price continues to fall, the second target will be $90.8, and subsequently, $90.5. This strategy combines technical indicators and forecast data to capitalize on the current downward trend while mitigating risk through strategic stop-loss adjustments. The RSI oversold signal provides a clear entry point, while the Bollinger Bands confirm the volatility, and the forecast reinforces the bearish outlook. This will yield high returns.